welcome back to the channel. My name is Sophie and today I'm going to be sharing with you how you can make passive income with bonds in under 2 minutes. Okay, so there's actually a lot to talk about when it comes to bonds, so let's put that time on the clock. Boop. And let's get started. So first of all, what is a bond? A bond states who owes who how much money, when they have to pay that money back, and with how much interest. When you're buying a bond, that essentially means that you're lending a loan to someone. The main reason that you might want to purchase bonds is because of the interest that you will get on that lended money, and you can actually calculate that interest in advance. But the longer until that bond actually has to pay it off, the higher the chances that inflation actually decreases the value of that money that you will get back. And because this poses a greater risk to investors, such as savings account, which I covered in a previous video, or collectibles, for example, coming soon, you actually get a higher rate of interest than those more short-term forms of investment. So here you have a key decision to make, because the more time passes until you get back your money, the more interest you can accumulate, but at the same time, the more inflation can actually devalue that money that you're gonna get back. And in addition to that, the return that you get back can actually be less than you expect, first of all due to inflation, but also due to the taxes that you actually have to pay on that return. Stocks are actually riskier because you don't know when they're gonna go up, when they're gonna go down, and that all depends on that company. But because of that potential up and down, they can also be more rewarding. However, bonds guarantee that you will get paid back, whereas stocks, if you invest when they're higher and you sell when they're lower, you make a definite loss. One way that bonds can actually hurt you is if you actually sell the bond before its due date, which means that you're actually gonna get back less money than you paid for that bond in the bond market. Another way that bonds can hurt you is if the actual bond issuer goes bankrupt, because then they can no longer pay you back. But because of this higher risk, there's actually a higher interest rate waiting for you. And then the third and probably biggest way that bonds can hurt you is due to inflation, if simply inflation devalues the money that you're going to be getting back. Okay, so that's bonds for you guys. I think I pretty much nailed it with that time again, just about. There was definitely a lot more content in this bonds video than in my previous savings account video. I do hope that you enjoyed this video. If you did, leave a like, subscribe if you're not subscribed already, and hit the notification bell, because there are more of these videos coming out where I'll be talking about stocks and collectibles and also real estate. So stay tuned for that, and as always, have a great day and stay safe.